Okay, hi everybody. This is the 19th of February 2025, and this is episode number 10 of a Physics of Bitcoin with Giovanni and Stephen. Um, like always, I do a little introduction about the show, mostly for the people that are not yet familiar with what this show is about. But basically, Stephen and I have a background in the physical sciences. We are both astrophysicists. We work in different areas of astrophysics, and then we changed our career. I became a neuroscientist. Stephen went in the private world, mostly with, if I remember, maybe Stephen can add a couple of words after my introduction in mostly in data analysis, right?
High performance computing, supercomputing.
Supercomputing. And so basically, we want to use our background in the physical sciences and all the tools that we have developed in our career to take a look at Bitcoin from a more scientific point of view. And so we go a little bit deeper using different tools, different analysis, and we share these findings with you. It's also a motivation for us to explore this topic because every time we finish the show, we think, okay, what do we talk next week? And so it's actually a way for us to go deeper and exploring Bitcoin because it's basically almost an infinite subject, to do this kind of exploration. So we have a different angle from other people that maybe, it's not necessarily the best approach. Of course, we think it is, but it's a complementary approach to what other people do in the field. So do you want to add something else?
Well, I'll just say our approach is that we try to tie things back to fundamental physics and to use a scientific method in the way that we explore. We're not doing financial analysis purely. We're looking for the underlying causes of what's going on and the analogs with things in the physical world and explanations that, we've seen are relevant because of our long history spent with physics.
Correct. Okay, and like always, Stephen has a nice plan agenda that he will share with us in a moment.
Okay, here we go.
Okay.
That, ladies and gentlemen, is a picture of the Nile River. And it's the backdrop or the background for what I want to talk about, which are Hurst exponents. And they're named after a gentleman, a British hydrologist who came up with the statistical method that yields Hurst exponents. This is related to the efficient market hypothesis in the sense that you can use Hurst exponents to falsify or to destroy the concept of the efficient market.
We lost you for a second. No, we cannot hear you.
Okay, how about now?
Yes.
Okay.
Don't touch your microphone or you get
okay.
one.
Sometimes it just dials down the input volume. I don't know why.
Huh.
There are over a dozen methods to try to estimate the Hurst exponent. In this presentation, we're going to use the classical one that was developed by Hurst himself, and which goes by the name of R/S. R is a range, S is a standard deviation, but it's a very special kind of range, and so I'll show what that is. There are other people who have applied the Hurst exponent analysis to Bitcoin, but they've done it with ignorance of the power law. They haven't used the power law as part of their analysis. So I'm going to show you the results when you incorporate the power law as the underlying fundamentals. You go through a process that's called detrending. You take out the core trend. And their assumption is typically use some kind of moving average through whatever window they're evaluating. And you'll see that we have to move our windows along and evaluate it as a function of time. But instead, what I've done is detrended with the power law. And I find a much higher Hurst exponent value, much stronger long-term memory, because that's what it indicates. It indicates departure from efficient market hypothesis. It indicates long-term trends and long-term memory. The other thing I'll show you is that the Hurst exponent seems to peak about a year or over a year ahead of the bubbles, the peak in the bubble price. And in fact, there's a possible peak in July. So that's kind of interesting, and we'll talk about that. Okay, so the first thing I want to show is that already the efficient market hypothesis, EMH, has been rejected for Bitcoin in a large number of studies. There was a review article that was published in 2021. So it's looking at studies that have data up through 2020, essentially, kind of misses, the factor of 25 that we've had or so, really a factor of more than 25 post the COVID break. But they reviewed everything they could find in the literature. There were 25 different studies. Some of these studies did use the Hurst exponent test. Some used something called detrended fluctuation analysis, which is a related technique.
Mm-hmm.
And out of 25 studies, 20 rejected efficient market hypothesis.
Do you mind to state the hypothesis, what the hypothesis says? I know that
Sure.
it should be common knowledge, but let's remind our public what is the hypothesis about.
Basically, it's that you have mean reversion around some trend. So if you think about S&P 500, the whole idea behind efficient market hypothesis is that all the information is already priced in to the current price, and so that it requires new information. But it does not allow for the fact that not all players have perfect knowledge and have perfect information. It does not account for the fact that many people have deeper pockets than others, so they can invest to a greater extent. It does not account for the non-Gaussian behavior, the black swans, the very fat tails that we sometimes see when you get bubbles and crashes. And there have been many events that are 5, 6, 7 sigma. So it basically assumes that things move along a trend and then you have a normal distribution around that trend. And that that's used in the option pricing model with Black-Scholes. And of course, Black and Scholes Nobel Prize winners were behind long-term capital, and long-term capital went bust because there always are other factors that come in, such as counterparty risk and very long flat tails. So efficient market hypothesis says, for stocks, you're going to move on a trend that's like 9 or 10% for the S&P 500, and you're going to have sort of normal Gaussian shaped fluctuations around that.
Yeah, and the trend is mostly due to inflation anyway, right? It's
correct.
Like an exponential trend over a long period of time. It's not
yeah.
Even if it is exponential, it doesn't grow much because we're talking about a few percent a year. And there are consequences, like, for example, basically you cannot beat the market, right? The market is the best you can do. Maybe invest just in average fund, right? With it has a little bit of everything, like SP 500 or whatever. It's very difficult to beat the SP 500, right? But we know already that with Bitcoin is nonsense because we have beaten the SP 500 by many times, right? So Bitcoin is it's a demonstration that at least if you compare it with the normal stock market, you can beat it, by a lot.
11 out of 14 years. Yes.
Exactly.
Yeah.
Right?
Yeah. So that's efficient market hypothesis. One other thing worth noting, because we've mentioned this before, is some of the articles favored the log periodic power law model. That's different from the long-term power law trend. It's a way of modeling bubbles that incorporates sort of wave action, sinusoidal behavior, and bubbles that get closer and closer. That's Sornet's model. So yeah, that's about it. But the thing is, none of them incorporated in their thinking the power law theory. And so that's what's different about what I'm going to show. So what's a Hurst exponent? So this British hydrologist, Harold Edwin Hurst, who lived until 1978, published a paper. He was investigating long-term storage capacity of the Nile River. He published his paper the year I was born, so it's quite old. But he defined this rescaled range analysis and this Hurst exponent. And I'll show you what that means. And it turns out that itself is a power law. And I'll show that in the following slide. Mandelbrot has worked on this stuff too. He extended because there's some connection to fractals.
Mm-hmm.
What Hurst was studying is the long-term storage capacity of the Nile River basin and reservoirs in general. And how do you figure out?
They're all connected. Fractals, chaos, power laws. These are
Yeah.
by the way.
So Hurst methodology is now used in all these different fields, ranging from environmental science to physics and neuroscience to image processing and social sciences, as well as in financial modeling. Okay, so here's kind of the definition of it. The classical technique is you have to first determine your residuals and detrend them, and they would typically use some kind of moving average, whatever the average is, the mean within. Now, there are different approaches. You can take the differential returns. Sometimes people do that. You can normalize them to something. You can take the log returns. You can take the log values and then chunk. So what I've done here is I've taken the log price, and then I use a power law to detrend. And then those are the residuals. So what you do is you take the residuals, and then you have to do a lot of partial sums within your window. And the details are shown in that little box over in the right. For example, if your window is 100 data points, you have to take 100 partial sums that range from the bottom, to 1 to 2, all the way up to the top. You then find the maximum of all the partial sums. You find the minimum of all those. And that defines what's called the range. You then normalize that to S, which is just the standard deviation within your sample of 100 or whatever it is. And when you do that, what you find is that this ratio of range over standard deviation is itself a power law with respect to the size of the window that you used. And so you've got a larger sample set, and you're taking a sliding window and moving that along. So that sliding window of size n is moving along. And you find that it has this Hurst exponent, which typically you expect to lie in the range from 0 to 1. And if it's 0.5, that's a random walk. You can kind of think of that as if you take a random walk, your length on average will go up as the square. Your distance from the center will, is over time as you walk around. Mm-hmm. And so it's kind of a square root law. If it's close to 0, then it's mean reverting. If it's above 1/2 and approaching towards 1, then it's a trend. And the higher it is above 0.5, the stronger the trend. And it's reflecting the long memory. What it's saying is that the range is growing in absolute terms, as time goes on, and as you move the window to later and later times. Okay. Now, typically you need 1,000 data points or more. And then you want windows to move in a larger data set. So you'd like to have 1,000 data points or more even in your window. So you need a lot of data points. There are many different methods. Some of these are listed here. The RS statistic is the one we're using today and is the original method. There are also some frequency domain methods and some wavelet-based methods. Maybe we'll talk about that afterwards with Giovanni. Here's one study that was done on Bitcoin data using the RS method, and they had a little over 5 years of data from 2016 to 2021. What they found was a value of 0.57 over the full range, but then they also said that some of their portions running for about a year or 2 years appeared like random walks. Again, they weren't thinking about the power law when they did this. Here's another study that was also published in 2023, and they were comparing to emergent market stocks. So on this graph, the Bitcoin's in red, the emerging market stocks are in blue. You can see on average that Bitcoin is higher, and in fact was always persistent, essentially always above 0.5. It also never exceeded 0.75 in its Hurst exponent. Stronger trending than the emergent market stocks, basically. But the average is something like 0.6, just eyeballing it. So not that different from the other study. Okay, here's what I've done in the past week. I used the RS method. I first determined the power law, and I used the median quantile regression for the power law. I used the log price data and detrend that to get the residuals. And then this is the result for the full price history, and I will show you in subsequent slides, breaking it down with time. I did it with both weekly data and daily data, and I did it for dollars, and I did it for Bitcoin against gold. And the results are all consistent, and they're showing around 0.9 or better. So in the graph, the weekly analysis is shown on the right, and those numbers are like 0.88. And the green is against dollar, and the gold is against gold. The yellow is against gold. And then for daily, it's even stronger. It's 0.97. It's almost, all the way to 1, and gold was 0.96. So very, very strong persistence. We have a highly inefficient market, as it were. Efficient market hypothesis is basically slayed here. Okay, let's look at how this develops on time. And I did it in increasing levels of detail just to compare and see how things would change and see how much consistency we get. For this, I needed to use hourly data, and I started it out with a 1-year window. So that's some 8,000 data points just in the window, right? And then I took half-year steps. So every half year, there's a point plotted here, but the window is 1 year in duration. So it's at the center of a 1-year window. And first of all, what we see is the numbers are quite high. They're sort of around 0.98. It's very slowly coming down for reasons of perhaps some, uncertainty or noise. We get a couple of points even above 1.0. And we see some peaks, particularly 2 very clear peaks, and to a lesser extent, a third peak. And we see those come down, we see those decline. But we also see that the peak in the Hurst exponent H is about a year earlier than when the peak price is. So those boxes that I've drawn around the Hurst peak have their right edges at the time of the price peak. So the price peaks were at the end of 2013, the end of 2017, and towards the end of 2021.
So it's basically predictive of a price peaks.
Yes, with a little bit of wiggle, which I'm going to show you. So then I want to look at things a little more finely. So I decreased the step time to 1 quarter year, but it's still a 1 year window. Again, we see the peaks, and the third peak is more clear this time for the Hurst exponent. Those are shown with the circles or ovals. And then also you see a peak around the start of 2024, end of 2023, possibly, but uncertain. And the green arrows, the tips of those mark the price peaks. So it looks like the price peak is about 1.25 years after the Hurst peak. One of those red X's is misplaced, the third one. It's actually at the tip of the green arrow. Okay, then I went even finer, and it gets a little noisier, slightly more complex, but generally consistent. Here I took 200-day windows, and my steps were 50 days. And so it's a little bit noisy because we only have 4,800 data points in our window. But again, very high values, 0.9698, even above 1. So it's definitely an inefficient market, slowly coming down, but still well above 0.9. We see the peaks in the same location, except now we see kind of a double peak in the Hurst exponent. And I have in the background, I have the price history as well. We know that the third peak for 2021 is a double peak. Right. So we've got kind of a double Hurst peak and a double price peak.
Mm-hmm.
I've drawn the arrows from the Hurst to the price peaks, and I've drawn the 2 Hurst peaks with 2 arrows to the second of the price peaks. In the next chart, I'll show the exact time intervals of those corresponding to those arrows. And also here, our 2024 peak is now moved compared to the previous graph. And it's moved to roughly mid-2024 as a potential Hurst peak.
And so this means if it is predictive like before, we're going to see a price peak in end of this year.
Yeah, I'll give you exact date.
Okay,
but with a lot of uncertainty. Okay,
sure.
So the next chart. Okay, so this has the 3 bubbles. It has the Hurst peaks for those 3. It also has in the case of the third bubble, the earlier Hurst peak. And then it has the dates of the Bitcoin peak, and then it has the intervals. So for the first 2, the intervals were, well over a year, 486 days and 410 days. For the third peak in 2021, you see these 2 arrows, and this is the length in days of those 2 arrows. So it's their length, projected onto the x-axis.
Right.
And so one is close, it's 83 days, and the other is distant, it's 783 days.
Mm-hmm.
The average of those 2 is 433 days. So,
yeah, cool.
It's similar to the other 2 if you take the average, but it's
right.
It's a little bit more complexity here. The Hurst peak this time seems to be July 3rd, 2024. And if I take 443 days, which is the average of the 3 earlier peaks, again, using the average of 2 sub-bubbles there, and then project that forward, that would be September 19th of this year. With uncertainty of.
But it's kind of cool because, we have also these other independent predictions, based on the decline of the peaks that tell us the peak should be Q4 of this year, right? Anything between September to November, something like that.
Right.
It is kind of interesting. There is a lot of convergence using different methods. Yeah,
it's broadly,
and it kind of makes sense because usually the bull run lasts about 1 year or a little bit of 1 year, right? And that is where usually we see trend following, because once we start to go up, we are pretty consistently going up. And if Hurst coefficient is all about basically trend following when it's above 0.5, it makes sense that it will reach a peak at the beginning of a trend, right? When we are following, when we start to go in a trend
Right.
following pattern.
Right.
Yeah, it kind of makes sense. That is the interpretation. But it's nice to see it with using this more sophisticated method, basically. Yeah.
Yeah. So let me just summarize. First of all, kind of independently, but including a little bit of Hurst exponent analysis, 80% of studies reject the efficient market hypothesis for Bitcoin. The Hurst exponent and method looks for long-term memory, for long-term trending nature inherent to the asset or whatever it is you're modeling. And if you take the step of detrending with the power law rather than just using what's essentially a moving average as you move your window along, then you have a different residual set. And you find that H is very, very high. It's above 0.9. And it doesn't matter whether you do it for Bitcoin versus dollar or Bitcoin versus gold. So this means that the alpha of Bitcoin is strong and our knowledge advantage remains high. Other authors failed to use the power law foundation, and so they find H greater than 0.5, but they get numbers more like 0.6. And if I use a sliding window of, well, actually, that shouldn't say sliding window, that should say steps. But the sliding windows are a year or 200 days, and the steps are half a year, quarterly, or 50-day. And from all those, I get consistent results.
Nice.
The Hurst exponent may peak around a year and a quarter prior to the bubble price peaks. So thank you for watching, and I'm going to stop sharing. And now Giovanni can tell us what he's done with
Yeah.
the Hurst coefficient.
Let me find my slides. Okay. And I will try, because I spent some time figuring out how to do the presentation. Let's see if this works. From current slide. Is it better? Does it look
It's small.
nice? It's still small. But it looks like though it's full screen, right? Full screen.
Yeah, the height is not good. The width is not too bad.
Okay.
It's a little hard to read the text.
Well, this is a small text anyway in this slide. Let me see if I can make the slide bigger. Zoom in. Just a second. I will try again. Because it's a snapshot from the article, but let me even do this. Slideshow from core slide. What about this? Does it look better?
It looks about the same.
Okay. It is a full screen. It is full screen. I mean, you see that it's full screen. Anyway, because it's a bunch of text, let me one more time. Give me just one more time. Because otherwise it doesn't even fit in the page. I don't know if you can make it bigger than this.
That's a little easier.
Okay. Is it okay? No. But anyway, so this is an article. It came out some time ago, right? In 2018. So, what, 6 years ago? And this actually was a little bit before I found after I found the overall power law. Of course, I mentioned the power law before in Bitcoin data, but the time, price versus time power law is earlier than this. Um, and it's in this, you can see the title, it's already interesting, right? Chaos and order in the Bitcoin market. And I can read it to you if you cannot read it. It says the Bitcoin price has surged in recent year and has exhibited phases of rapid decay. In this paper, we address the question of what extent the novel cryptocurrency market can be viewed as a classic or semi-efficient market, right? So we are trying to answer the same question. We are trying to understand, is the market efficient or maybe semi-efficient? And so we are looking at these fractal properties, right? Because we say the Hurst coefficient is related to fractal property of a system. And we say are used to show that Bitcoin price exhibits a very interesting multi-scale correlation structure. So basically this idea that it doesn't matter at which scale, because as you show, did you ever try to use hours? You went all the way to days, right? Or
I went to hours. No,
hours?
Yeah, all of those actually were hours. Those three graphs I showed.
Okay. Yeah, we'll be even interested to see if minutes applies. But they look at this idea of looking at different scales. When you do this, we call this multi-scale or multifractal. The structure can be described by a power law behavior of a variances of a returns as a function of time increments. So they don't talk about here the overall behavior being a power law, but they are mentioning power law behavior of the variances of a returns. So basically, the volatility as a function of time increments, and it can be characterized by two parameters: the volatility and the Hurst exponent. This power laws parameter vary in time. A new notion of generalized exponent. So basically, they use this particular property that we found in Bitcoin that is related to power laws, and they created this modification of a Hurst exponent, which allows us to check if a multifractal character of the underlying signal is well captured. It is shown the monitoring the power law parameter can be used to identify different regimes. So I don't know if you did that. Were you able to show that maybe? But in a sense, yes, right? Because you identify peaks and lower values. But it will be actually interesting, given that we know now how to split the different modes, to test Hurst only on these modes. Maybe that is something that you can try next week, right? To see does the Hurst coefficient changes if we focus only on the different modes that we identify, like the peaks, or maybe even when we go up, when we go down, when we follow a power law. So that is a thing to test, right? Maybe next week. And so they say a novel technique to identify this regime switches based on a goodness of fit of a local power law parameters is presented. It can detect data associated with non-events in the marketplace. And then I love this sentence. It says, a very surprising result is, despite the wild ride of Bitcoin price in recent years and its multifractal and non-stationary character, this price has both local power law behavior and a very orderly correlation structure when it is observed on its entire period of existence. It's funny because we know now what is that very orderly correlation structure. It's a power law in itself, right? It's a power law of price over time. So they were very close to actually discover the overall power law. They say, oh, there is this very organized and correlated structure over time. Well, it turns out to be a power law. Even that is a power law. So I love this paper. It's very cool paper because it has power law all over the place. I mean, if you want to understand Bitcoin, you need to understand power laws because they show up everywhere. And so this is actually their calculation using this method. I think because, again, they didn't take out that overall power law, right?
Right.
That they probably use something else like the average behavior, etc. As you see here, you have a very complex structure. Sometimes it goes actually below um, 0.5. It means more mean returning behavior when you have these peaks. So this is what they found. They then calculate also the volatility that we know that over time decreases. Let me see. Yeah, so these are the two main slides. We identify also these regimes. So anyway, I try to replicate the result because it's not a common way of um, doing the Hurst coefficient. And so I created actually an indicator, and I can show you how it looks like and the relevance of it. Now, I do want to try also what you suggest, that is to subtract the power law and see how that indicator looks like, to try to reproduce and maybe make a trending view indicator out of that. But that is a good suggestion. But let me show you how mine looks like. Okay. And so this is it. Let me see if I can make this bigger. Is this bigger
So,
now?
yeah, that's great. So how are your residuals defined here?
So I don't subtract the power law. I just use a moving average,
Okay.
like usually it's done. And so, and I don't remember if I think I use 125 days. So relatively, it's not even 1 year. It's a relatively short, but in theory, one can change these because I wanted to see if I could catch the more local behavior instead of the overall behavior. But I want to see. I want to try to replicate your result and recalculate it, and then use what you did and see if we get some other insights from your approach. But here, you see, this is the coefficient. I think I, I was able to reproduce it. It's a in trading view has limited resources in terms of computational power and tools. And this is at least three different loops, one inside the other. So it was kind of complicated to do it because basically what they do, they calculate the spectrum, the Hurst spectrum. Then it turns out it is like a power law. And then you fit the power law to get the Hurst coefficient. And so the way of interpreting this is that I draw here with 0.5 line, and that if we are above it, means we are in a trend following regime, and if we are below the 0.5 value, we are in a mean return regime. And notice, just first sight, the Hurst coefficient, and this is a delayed coefficient, so it will take time to catch up with the data because it's in a moving window. But you can see very well that every time we have we are in the beginning of a bull market. Let me point out in the chart the relevant points. Let me go to my chart. So, for example, here, you see, here is where the bull market starts, right? And you can see we cross the 0.5. And then we continue to go up. But again, the simplest way of understanding the Hurst coefficient is it has basically two main regimes. If it is above 0.5, it means that it's trend following. If it is below, it's mean returning. And you can see the value continues to go up, basically kind of reaching the peak. In this case, slightly different from what you did. So the peak here is actually associated. It happens a little bit before the price peak. And then once we go down, the Hurst coefficient starts to go down. And the region that is below 0.5 is roughly associated with the bottoms. here, for example, right? And here. And right now we are above. So we are supposed to be trend following. Even if no much price action is happening, it's bending a little bit. That is a little bit worrisome, but in general, we are supposed to go up, right? And again, if you can imagine these kind of reaching a peak somewhere, and the price peak is supposed to be here, these will continue to go up until we reach a peak. But yeah, this is my version of this S coefficient based on that paper. But I want to retry by using a different definition of residual based on subtracting the power law first. Because I think you lose some of the signal given that the overall trend is understood, that is the power law. And so this will allow us to understand better the local behavior of this, relatively to the power law, to the overall power law. But yeah, it's a very powerful tool that gives us more insights in how Bitcoin is behaving. Okay, so we can take some question. Let's see. All right. So there is this question here. We can answer a couple of questions while Stephen is coming back. Why will Bitcoin top on your power law indicators past October 25? You mean here? In these indicators, mostly what we do is to use the end of the year because they are not meant to be like a precise prediction. They are mostly meant to show there is like a periodicity in the data. And this periodicity in the data, we have other indicator where basically they all show, like if I can show you this one. This one. Okay, so the idea is that if you overlay the different cycles, then it seems that all the peaks kind of seem to be aligned close to the end of the year. Sometime a little bit before, sometime closer to the end of the year. So basically, when we make our prediction where the next peak is going to be, we are using the end of the year. Now, according to Stephen, there is always some uncertainty there, but basically, we say September. So this is within that range of. So imagine instead of being like a straight line, it's more like I like the idea of putting a box like he did, right? So we should put more like a box, this kind of area where if we have a peak, this is where the peak is supposed to be. I think September is probably an early date. I would say it's anything between September to December. And it's kind of interesting that different methods kind of converge to similar results. Okay. Let's go to the next question. Okay, so we can, maybe you want to answer this, Stephen? Is Stephen back?
What do I feel the likelihood is for the next bear market bottom to hit the bottom power law, about 70K? One would expect that. One would expect something like that.
What you both feels is the likelihood of a sequence near bear market bottom into a bottom power law. I mean, if we have so if you use a scientific approach, right, to these, the only thing that one can conclude it's based on previous patterns, right? Because what else can we use, right? If not what Bitcoin has done before. And the idea is, given the regularity that we have observed before, one can assume up to a certain level of confidence that these patterns repeat. And even if and you say how can you be certain? Well, the power law I think it's a rock solid at this point. Has been, and there are also theoretical reasons to believe the power law will continue, right? Because it's something about the real nature of how Bitcoin is growing. Now, these cycles, I think, have to do more with interaction, both internal behavior of Bitcoin, because maybe the bubbles are another expression of this, fractal behavior of Bitcoin. Like there are bubbles probably at all levels. It's just that we pay attention to the huge one because they're the one that we see and seems noticeable. But there are probably oscillations and bubbles at all levels that work with the power law. So maybe it's something intrinsic to Bitcoin itself, but also, and in physics we study things like that. You can have some internal oscillatory behavior, but then there is some other things happening in the outside world that is also oscillatory, and there is some interaction between these two clocks. There is an internal clock and an external clock. Like for example, in biology, I spent some time studying these things when I was at Northwestern. My lab was about the neuroscience of sleep, but also what are called circadian rhythms. So every human being has his own circadian rhythm. The periodicity of these rhythms change sometime with the age, but it's very individual. Every person has his own clock. So, and it's called circadian because it's about 1 day. Dia is day in Latino, right? But it's never perfectly 24 hours. So it can be 23 hours and 52 minutes for Steve, and for me it's 24 hours and 10 minutes, more than 24 hours. But what happens is if you go outside and you are exposed to the sunlight has its own periodicity, then your clock gets reset by that. There is basically you're getting coordinated with this external pattern, and then your internal clock kind of tries to follow. Is driven by this oscillatory pattern that is outside. And in physics we study a lot. Like we have many examples in nature where you have some natural oscillation for the system, and then there is some other phenomena that drives. We use this terminology that drives the oscillation, and it's very interesting because you can get all kinds of different, very complex behaviors. It can be non-linear, depends on the type of driving and so on. That is when you get maybe chaotic behavior, all kind of interesting things. If the oscillations are small, they tend to be linear. If they are big, they are non-linear. And this is why, again, studying this as a physicist is very interesting. So this is actually an open question: how the internal oscillation of Bitcoin. We know that there is a natural one, that is this Fourier halving oscillation, right? How this oscillation interacts with the external world, like for example, microeconomic oscillations that have slightly different periodicity. So it's something that actually eventually I want to study myself. It's in my to-do list to study this interaction of different periods. So yeah, so we don't know yet if these periodicity are really fundamental to understand Bitcoin. Maybe they are going to disappear at a certain point. But if they continue to exist, then we will see a peak, and the peak is going to be where it's supposed to be, and then oscillations have a bottom. So we are going to see a bottom. And again, if everything behaves like before, that is the assumption that we are working with right now, because it's basically the only way to make any prediction at all. Otherwise, it's just guesses. Then yes, it should go down to 70K, because this is so. If you see this pattern, usually what happens is that the peaks are becoming smaller and smaller, but the bottom is consistent, and so you go always towards that bottom, no matter what, no matter how big the peak is. And that bottom is supposed to be 70K. Anyway, let's go to the next question. I think he answered what inefficient was. This is one of the
Sure. Well, this is just the opposite of what the efficient market hypothesis is, that says, everything's priced in, you can't have an edge. And what we're saying is with Bitcoin, it's in that, using that language, it's inefficient in the sense that the world as a whole doesn't know what the value of Bitcoin is, right? So we're in the vanguard. We know the value, but 7.8 billion people don't know the value, right? And of the 100 million people that are involved, what percentage of those know about the power law and understand the nature of the power law behavior? I guess it's not 10 million people, right? It's not 10%, probably.
Yeah, a small percent.
So
And
you are 1% of 1% almost,
yeah,
but you're a very small percentage of a very small percentage. So we have an edge. The market's inefficient if you really understand how it's behaving long term, which is not mean reverting in the long term, and which is not random walk in the long term. It has long-term memory, long-term trend governed by the power law.
yeah. And in fact, this graph that you're seeing here is also another way of showing these. So in particular, the one below, right? So what they did here, I subtract the power law overall, and you can see there are the three clear phases that we mentioned in the past, right? Because in this case, what I'm doing, I'm superimposing all the different cycles that you can see the different colors. And then the blue line is the average, right? So if we had an efficient market, first of all, taking out a trend like the power law, and the power law is not like this kind of expected trend, like, okay, there is some inflation, so maybe I need to take out that inflation, but it's really the overall gain of most of every stock. It's if not 90%, 100%, is close to maybe 50, 60% of what the stocks have done over the last 25 years. I know because I did calculate it. If you look at how much the SP 500 gain over the last 25 years, 50% is gone only by inflation. It's due to inflation. So basically, it's basically keeping up with inflation. You're not really seeing your investment growing by a lot. It's mostly keeping up with inflation. It's somehow anti-inflationary. Not as good as Bitcoin, of course, because we do so much better than inflation, but it's almost like a way of not losing your money under the mattress, right? And there is a little bit above it, but mostly for the SP 500, it's in the last few years. The general trend, it's mostly inflation. And the power law is different because it's still beating everything. It's not due to inflation. It's due to Bitcoin going up in value over time. And it's doing it, one of the things that people need to understand is that you could have done what Bitcoin has done only if it was a power law. What do I mean? In the beginning, Bitcoin needed to go very fast because it was almost like a plant, right? That is surrounded by much stronger and bigger plants. And if this plant has not some, it's a very tough plant that grows fast and it's very robust and it's difficult to kill, like almost like a weed that, very, but it's sometimes people call weeds medicinal plants, right? Oh, I don't know what this plant is. It's a weed, right? And in Italy, we are used to this because a lot of what things people call weed here in the United States, we actually use for medicine, So this weed is growing so fast, and if it continued to grow in that way, like it was growing in the beginning, right, doubling every year, for example, and it did that in an exponential fashion, it will have collapsed on itself. It will have gone too fast. It will have been like a meme coin. So it needed to do that, but then also to slow down over time. That is exactly what a power law does. So the power law, again, is in a sense the best possible type of growth for this kind of system. And even now that we are slowed down, because right, we can calculate, we can write a formula. Me and Stephen have shown this many times how to do that formula. But there is a little formula that tells you what is the annual return given any particular year after the Genesis block. And this one, right now, we are about 42%, something close to that. And it's still much better than the stock market, but it will continue to go down, right? Because even at 42%, if we did this every single year, it will be too fast. It will not achieve a goal of Bitcoin, that is to absorb the entire monetary system of the world, to be the monetary system of the world, so it absorb little by little the entire economy of the world. And you can do that only if you do it in a sustainable manner. So the power law is really the best type of pattern. And it's such a predictable thing that it destroys its existence. It destroys this idea of efficient market. But what is interesting is that even when you subtract that, right, because it's part of what, and Stephen maybe can correct me, even when you subtract that pattern, you still can show there is still a lot of memory left, right? It's not one possible interpretation of what you found, because you still subtracted the power
Yes.
law, right?
Yes. Yes.
And even
Our power
when
laws
you
out.
subtract, right? So people think that there is a lot of randomness, and yes, there is, because it's not a fully deterministic system. But at the same time, there is a lot of memory. Basically, Bitcoin knows what it's doing at any moment, depends on what happened in the past.
It's
Uh,
because the Bitcoin power law is so steep. It is nearly the sixth power of time.
yeah, yeah.
If you take the residuals, you're just taking the one derivative, the first derivative, temporal
That,
derivative of that. So
that
you're
is also a
lowering it
power law.
to the fifth power of time. So you still have a very steep power law to the 4.8.
Yeah.
Yeah.
And this graph, this where and on top of that, there are also these oscillatory patterns, because you see here I average the cycles, right, over 4 years. Basically, this is what I'm doing. I'm superimposing chunks of 4 years, and you can see this is actually what a scientist will do. Like if we were studying the luminosity of a star, and we wanted to see if I found some kind of periodicity, I will choose different amounts, and if you add a candidate, because it kind of looks like when I plot it in a graph, there are semi-sinusoidal patterns. I will use that periodicity and then average over that window. And if I see something that looks like not a perfect flat line, means there is some periodicity. And you see here, this kind of looks like a sine wave, right? In the sense that it goes up, it reaches a peak, and then it goes down. And then after, it is in this region where we kind of follow the power law, and you can see that the blue line is flat. That means it's following the power law. This is what you will expect if you detrend something, right? That there is no trend anymore, that is flat. So this idea that Bitcoin has very precise patterns can be shown by science very easily, with the same method that we use to study other type of patterns in nature. Now you can do more sophisticated things, like, for example, a Fourier transform. That is another thing that Stephen we can explore using different methods like wavelets, etc., to look at this periodicity. Because it's not this is a major one, but there are other ones that are really interesting. Like there is, for example, there is a weekly, there is a monthly periodicity, that is really interesting. But yeah, so a lot of interesting patterns in Bitcoin. Okay, and I think we had another question. This is a long one. I don't know. Okay, we can look at this one. But money supply fatigue is even cut. It's almost back up to where it was prior to Fed. Yeah, I have a graph where I can show you the liquidity. That is interesting. Bitcoin is not responding yet, but maybe there is a delay between liquidity and the price, and this is why it didn't respond yet. But it's actually a good sign, because the liquidity is going up. You see here. So this is a model that I created that is basically trying to calculate the price of Bitcoin based on the relationship between liquidity and the price. And for a long time, we were going down with maybe some fluctuations, and now we are going up again. That is a good sign. Um, yeah.
I don't know what the question is. Is the question what's going to happen with liquidity? I don't attempt to forecast that. What I do is follow Michael Howell and some others. Michael
Yeah.
Howell is probably one of the best. And he takes into account not just the Fed and not just the US money supply, but he looks at the entire global banking system, including, the shadow banks and the hedge funds and other sources of liquidity. And he looks at China and other nations as well that have an impact because Bitcoin responds to global liquidity. He has a very nice global liquidity index. And in fact, he says that it behaves as a parallel. Bitcoin behaves as a parallel relative to global liquidity. So that's kind of interesting too. But yes, we have had some issues with liquidity in recent months. We would like to see it tick up. So we hope it does.
Yes. And then there is this other question that kind of answer, but do you want to say? Do you want to elaborate on this question too?
Well, we don't know for sure. I mean, there's a global liquidity cycle. Michael Howell says that that's basically the rollover of capital, which is roughly a 5-year time scale because, the middle of the curve is 5-year duration. And he says it's a 5.5-year cycle. And that applies both to corporations and to governments that are rolling over debt. And that rollover debt is more important than just the new investment component. So that's one factor, but it has a somewhat longer term. Halvening, of course, people have always talked about, and it's not strictly an issue of supply cut, and that's kind of gone away, right? Because we're overwhelming the amount that's being mined or minted by, an order of magnitude with new purchases from ETFs and Saylor and everyone else. So that may be more of a psychological market factor. So there's that. And then, of course, there's, presidential cycle, election cycles, and that can also impact liquidity. So we don't know. We don't have a good separation of all of these.
Yeah. So, like I was saying before, right, a way of thinking about this as a physicist, look, there are internal cycles that are natural, right? Almost like a natural frequency. Many systems have that natural frequency. Like you take a piece of metal, you hit that piece of metal with a stick, and it's going to vibrate at the natural frequency of a system. It depends on the material, the size, all kinds of different things. Bitcoin has some of these, right? The first one that comes to mind, of course, is the halving cycle. But not necessarily, impacts how many Bitcoin are available, because I never liked that idea, because really, cutting by half something that it's already small, the output of miners is relatively small. If you cut that by half, actually should make it even less relevant. And, it's not going to create a liquidity shock or, some kind of supply shock. I never liked that idea from S to F. But there are things happening every 4 years. The miners need to update their machines, because and then maybe sometime we can talk about that, because Steve and I have done some work relating Moore's law with the rewards of miners, and that that happens on this kind of scales of 4 years. So, and also everybody knows about the 4 years, so there is some psychological factor there associated with the halving. So that is a natural inner rhythm of Bitcoin. And then this rhythm interacts through some kind of coupling. Again, this is language of physics. There is some kind of interaction there, almost like, you have a big spring and a small spring, and then there is some kind of connection between those two springs. And if one oscillates, right, is affecting the other one. Of course, the big one is affecting the small one more. Now, which one? Bitcoin is a trillion system, so it's becoming a bigger and bigger spring. But I don't think Bitcoin drives the general market. It's the market probably that drives, right? It makes more sense that the general market drives Bitcoin than the other way around. Until Bitcoin maybe is big as like the general global system, then it will be Bitcoin that drives everything else. Right now, it's more the other way around. Do you agree, Steve, on that? That is more the
Yes, just to sustain the power law trend, we need about 800 billion of new capital inflow, which
right.
is not an enormous number, right?
No,
That's the annual that we need, and that itself is first derivative of the power law, and also a multiplicative factor because there's some efficiency, about a factor of 2.5, roughly on average, that a new dollar pushes the price up more than it would. There's a market multiple.
yeah.
And
So
that number is going to grow because that number itself is a power law. But right now it's about 800 billion, and it's not enormous compared to the capital markets.
So one of my projects in the future, we will discuss it here when I have some results, is basically use a coupling system. In fact, it was actually my dissertation. I studied coupled systems like this because the ancient type of gravitational device. I don't know if you know this, Stephen. I work with one of these early gravitational wave detectors.
A Weber device?
Yeah. It was one of the few in the world at that time because then they went offline when LIGO came in. But the only one in the United States was where I was studying. In fact, I went to study there among the other reasons because of that. And it was a bar detector with 1-ton aluminum bar suspended by one single string of steel. And then it was all under vacuum and cooled down at low temperature using liquid nitrogen. In fact, actually, around it was actually helium. So first nitrogen and then helium. And everything was kept at very low temperature to diminish the thermal noise, right? That makes the bar vibrates because of heat. Then it was coupled to a squid that is kind of an amplifier based on the quantum mechanical properties based on quantum mechanics. So it can pick up very, very, very small variations of the length of this bar. The bar was 1 meter, but we could pick up almost something on the level of 100 of the nucleus of an atom or something like that. Completely crazy. And if we had the detector was so sensitive that if a supernova exploded in our galaxy and it was in the frequency, the natural frequency of this bar was about 1,000 oscillations per second. That is what we expect to a neutron star to vibrate when it explodes. And so we were looking for these signals, but we never found one. It's so interesting because my advisor spent his entire career, many decades, just looking at noise and nothing else. It was really curious. But you learn how to think about noise and signal and how to extract signal from noise. So I actually modeled that system. There was a couple, of oscillators connecting with each other, and I learned a lot of things about these systems and also how to use how to improve a detection. In fact, I invented a new techniques to improve the detection from a system like this. But I want to apply the same ideas where I want to treat Bitcoin like an oscillator and then see how it interacts with external oscillators and maybe even measuring the coupling, how strong is the coupling. And one indicator that will be very interesting is this one, right? Because this one is called the PMI. And basically, so the purple line that you're seeing here, it's these oscillations of this indicator. Is called the Purchasing Manufacturing Manager, Index,
PMI.
The PMI. And it's a well-known indicator. And you can see it's aligning pretty well with the peaks of Bitcoin. And in fact, if you look at the lower graph. So in the upper one, I show the graph, the price itself, and you can see that kind of relates to these peaks in the PMI. So the PMI is basically some kind of a subjective index because we send this questionnaire, and then the managers, the executive managers of a company, have to answer this series of questions. It's an index that goes from 0 to 100. Above 50 means that there is excitement about the market, about this processing, this process of manufacturing. That is, of course, related to the market too, because it also depends on the cost of production, on the number of sales that we have. But it's all based, even if it is subjective, it's still based on data. But then they aggregate all this information and they create some kind of sentiment index, right, of how well the market is doing. And it seems very good, because it has these very clear oscillations. Now, it's interesting because the peaks seem to be very aligned with Bitcoin. So this red curve is basically, I subtract the power law, like always, and then normalize the peaks by volatility, and divide by volatility so they are more comparable. And then I smoothed the signal. And you can see they align pretty well. The red is Bitcoin. But it's interesting because the bottoms, Bitcoin anticipates by 1 year the bottom of the PMI. And so that is interesting and needs to be understood why there is this 1 year difference. They seem to be happening early than the bottom in the index. And one of the reasons I was interested in this is because many people say the ETF changed everything in terms of how Bitcoin is behaving. And here in this graph, I show when the ETFs were introduced, and notice how well the two indexes match after it. So anybody that says everything changed after the ETFs, this graph kind of shows that is not true, because the two things were following each other very well previously, and now they seem to follow each other even better. So, okay, maybe that is what is changed. I don't know. But for sure, it doesn't seem like Bitcoin is doing his own thing. Still following overall, at least in terms of patterns, these macroeconomic indexes. So we need to study more how Bitcoin interacts with the external world. You see a strong interactions between Bitcoin and the US stock market. You want to say something about this, Stephen?
It seems to vary. It comes and goes. The correlation varies a lot. The periods when they're well correlated can be fairly long, but it does come and go.
Yeah, the overall trend, like I heard many people saying, "Oh, if you take the SP 500, it looks almost like a Bitcoin." It doesn't. Like, it depends on what you're looking at. If you are looking over the long term, they don't. Absolutely not. And that is what is relevant, because over the short term, in particular, when you're looking for something that is lasting over many decades, like SP 500, is going to look linear. Everything looks linear on short time scale. So things that are not similar, they can look similar, in particular if you start to plot over log charts, etc. So you have to be careful. This is why it's important to look at Bitcoin over its entire history. Then the difference between Bitcoin and the stock market, it's day and night. You can see they are completely different type of patterns. So you always want to look at the big picture, because this is the entire point. The power law, it's all about taking a drone and flying over the forest. You're looking at the forest as a whole instead of looking at the local behavior. And that is the story of the power law. So when you look at it in that way, then it's clear that they don't relate to each other. They are a different type of behaviors. And then maybe we can answer this question. Are we more likely to go to 500K this year to get hit by the asteroid? I think we are talking about the asteroid that is supposed to hit the Earth. That was 3%. I think 500K is much less than 3%.
Yeah.
It's almost 0%. Nothing can be excluded, but if you had to calculate a probability, I will say 500K is unlikely, very unlikely. Mostly because you can do a rough calculation, right? So just to give you an idea, that means 5, right? So let's do a calculation quickly together. Maybe I can teach you even how to do this calculation. So we are talking about 5. So imagine we are moving in an exponential fashion. So 5, the way to do this is, okay, how many months we have, right? 10. So this is how you do it. Okay, first of all, how many days there are in the next 10 months, right? About 300, right? So 10 months, right now we are February, let's say we go all the way to the end of the year. So 10 months, 300 days. So the way to do it that is you take 5, then you take the root, the 300 root. So basically, I can show you in the chart. Let me do this in the chart so you can see it. We teach you a little bit of math. So you take 5, you take the power, and then 1 over 300. Okay, this is how you do it. You can calculate this quantity because basically, imagine we are doing compounding every single day, right? So I'm trying to calculate what is the percentage we need to do to achieve a multiplier of 5 in 10 months. Okay, what is the result of that if we do that calculation? That calculation gives us 1.0053. So we will need to do about 0.5% a day, every single day for the next 10 months. And just to give an idea, last year we did something, last cycle, we did something close to 0.4% when I calculated over, and that was over an entire year. So we will need to do this 0.5%. It's not completely impossible, right? But it's very fast growth in comparison to what Bitcoin has done recently. By the way, that 0.5% a day is about 5 times what the power law right now tells you, because right now we are going 0.1% a day, according to the power law.
Yeah. Can I cast this in different terms, but the same
Sure.
underlying principle? Look, we're doing about 42% a year on trend. That means you double in 2 years. So to go 5 times in 10 months, you'd have to double twice, right? Which would normally take 2 years. So that's 4 years. Then you'd have to go beyond that by another 25%.
Yeah.
Right. And to go beyond by 25% is another half a year. So you'd have to do 4.5 years of trend equivalent work and do that all in 10 months.
Yeah.
So you'd have to collapse that much future into the next 10 months.
Correct. And again, this is, again, if you do this calculation, you get 0.053 actually. But if you do 2, that is what Stephen was saying, then you see this is more likely, right? Let's calculate this. This means if I do 2 instead of 5, right? You can calculate this number. That number is more like 0.23. So we need to do 2 times better than the power law to go to 200K. Factor of 2. It's a challenge, right? We need to do 2 times better. And you see right now, in the last few months, we kind of follow the power law since November. And now, all of a sudden, for the next 2 months, 10 months, we need to do 2 times better than that. It's doable, but it's starting to become more and more difficult.
I think we'll reach 500K before we get hit by the asteroid, but the asteroid is towards the end of 2032. So,
yes.
Yeah.
Hopefully we don't get hit by the asteroid.
Hopefully we don't get hit. It's on my side of the world, not yours, Gio.
Really? We already calculated where it's going to
Yeah,
be impact?
the path runs from Latin America through Africa and into Asia as the path. You know, it's sort of like one of these eclipse totality paths. It looks a little bit like that as terms of the possible places where it could strike. And it runs from Latin America through Africa, Middle East, and into India. Doesn't quite reach where I am. So
Yeah, hopefully it misses, and if he hits, it's a desert or something,
yeah,
or maybe the sea. But sea, no, because then you have tsunamis. A desert will be perfect because when we have a nice crater and a bunch of material that we can study, that will be cool. I think it will maybe there will be dust in the sky, but so the fact that we have these uncertainties mostly due to we don't have a lot of data points, right? Make we don't have too many of them.
It's just sad that the more data points we get, the probability is going up.
Up because it's probably very elliptic, right? It's a very elliptic orbit, so it's a difficult. It requires more data points to have a precise calculation of the orbit.
Yeah. We'll know within a year. We'll know within a year.
Also, because probably it's difficult to calculate also all the different influences of the different planets, and it becomes complicated calculations once. Because miss of it is going to be relatively small, right? Even if 100 meters, right? If it doesn't hit the upper level of the atmosphere, the stratospheres, and so it's interesting. And then, of course, as it comes close, it will be influenced. Probably very complicated calculation. Wherein you have to do almost like a simulation, right? It's one of these things that are predictable up to a point, because it's very nonlinear calculations. Once we introduce all the different things that can influence the orbit, it's interesting. It's terrifying. Anyway, so hopefully you learned something from this episode. We will continue our exploration and sharing with you. So let's see each other next week. Thank you, guys.
Okay. Thank you, everyone.